9 fascinating facts to know about Blackrock. Blackrock is an asset management company started back in 1988 by Larry Fink. As of now, Blackrock has emerged as the world's largest asset manager, having $10 trillion worth of assets. Blackrock is spread across 30 countries, having clients in more than 100 countries. The firm possesses expertise in the capital markets, wealth management, risk analysis performed by experts, and a wealth of market database. Before we jump into the video, make sure you have smashed the subscribe button so that you never miss out on any of our videos. Before we jump into the facts about Blackrock, let us quickly run through the concept asset management. Basically, an asset management company is a company that invests and manages the funds of the company so that the company can make more and more profits. The main goal of the asset management company is to identify the investment plans such as ETFs, stocks, mutual funds, etc., and allocates the funds in such plans in order to maximize the profits and generate higher returns from them. From the beginning, the company has a clear vision of providing the best investment advice, studying risk analysis, and helping the client to achieve financial stability. In fact, Blackrock has been successful in delivering this vision to its clients, and this is the reason behind its insane growth. But there are many asset management companies all across the world. Then what is so special about Blackrock? The feature of Blackrock is its mind-blowing growth in just 32 years. The reason for this achievement is the software named ALADDIN, which is definitely a crazy achievement. Number 1. First achievement. Very few know that Blackrock is into software too. The man behind this achievement is its CEO Larry Fink, who studied political science and later pursued MBA in real estate. In the initial days of his career, he worked with the investment bank called First Boston, where he performed exceptionally well and gave the company a profit of $1 billion in just 1 year. Number 2. Immediate loss. But soon after that, his department suffered a loss of $100 million. This made Fink start his own company, where they manage the assets of the companies with risk management responsibility. Number 3. Fink's journey to making Blackstone an authoritative company in the financial management space. Fink sought money from the Blackstone Group's Pete Peterson, who believed in Fink's vision of a risk management organization. It was dubbed Blackstone Financial Management by Peterson. Initially, Blackstone provided Fink and his team with a $5 million credit line in exchange for a 50% share in the bond firm. The company became profitable within months, and by 1989, the group's assets had doubled to $2.7 billion. In June 1994, Blackstone sold a $23 billion mortgage securities unit to PNC Bank Corporation for $240 million. The firm traded mortgages and other fixed income instruments, and it changed its name from Blackstone Financial Management to Blackrock Financial Management. Fink went on to become chairman and CEO of Blackrock Inc. Number 4. Mergers. Blackrock started to merge companies as its asset management shot up at a staggering rate. In 2004, Blackrock made its first significant acquisition when it paid $325 million in cash and $50 million in stock to MetLife Holding Company of State Street Research and Management, SSRM Holdings Inc. In 2006, Blackrock merged with Merrill Lynch Investment Managers, providing Merrill Lynch with a 49.5% share in the business and decreasing PNC's equity. Quellos Capital Management was bought by Blackrock in October 2007. It also became the world's top asset manager for the first time in 2009. Blackrock purchased R3 Capital Management, LLC in April 2009 and seized management of the $1.5 billion funds. Barclays sold its global investor subsidiary to Blackrock for $13.5 billion on June 12, 2009, which includes its exchange-traded fund business, iShares. Barclays acquired a nearly 20% share in Blackrock as part of the agreement. Number 5. Hitting the first big figure. And now, BlackRock's total worth of assets is $10 trillion, which is greater than the combined valuation of Microsoft, Apple, Meta, and Alphabet. According to the experts, the main reason for the success of BlackRock is the experience of Larry Fink, which he brought into the firm. While working with First Boston, he identified the potential and the roadmap of asset management. This was the reason that he could deliver the company a profit of $1 billion within 1 year. He incorporated risk management with asset management, and when you figure out the rough idea to achieve the goal, it becomes easier to achieve those goals efficiently as you already know what to do next. Since the inception of the company, its founders and co-founders have been very clear about the vision of the company. The idea of the company was to help its clients to achieve financial stability through wealth management and risk analysis. This clarity in the vision helped the administration to adopt strategic planning and explore different technologies in order to accomplish those already set goals. Having a clear vision plays a crucial role in determining the company's success. For example, Google, whose vision is to provide the most accurate and abundant information to its users, plays a vital role in the functioning of the organization. Number 6. Revenue. A massive chunk of the revenue of the company is driven by investment advisory, securities lending, administration fees, and thus it generated about 78% of the total revenue. This includes incomes through firms' equity, advisory related to investment that aims to minimize the risk to maximize the profits, administration fees that are used to incur all the cost involved in providing solutions to the client. Securities and lending are issued through debt and bonds. Around 7% of revenue is contributed by the technology services through investment management technologies, risk, and wealth management services to clients. It also includes providing digital tools to insurance companies, banks to help with their insurance and banking activities. This allows the organization to identify potential sources of revenues and enhance the opportunity of scaling the business. Number 7. ALADDIN. For BlackRock, the product that proved to be a booster in its success is known as ALADDIN. ALADDIN is a computer software that is used to track and analyze the portfolio of investors and clients. The portfolio is analyzed on the basis of more than 200 plus parameters on a real-time basis. On the basis of its analysis, this software identifies the risks and suggests the investment options. But it is not as easy as it sounds. The database of the software has all the sensitive information related to the country's political status, policies of the nation, economic information, insurance companies, and details of other vital institutions of the country. Thus, with the help of this crucial information, ALADDIN is able to analyze the risk very efficiently. And this is the reason why BlackRock is a favorite of companies across the world. Number 8. Access to confidential information. The size of the company that holds assets worth $10 trillion comes with a cost of privacy for ordinary people across the world. As the operations and clients of BlackRock are spread across 30 countries, it has access to all the confidential information of both governments as well as of the citizens of the country. The larger the volume of accurate data, the better it would be for BlackRock to identify the risks and challenges in the particular region, and the better it would suggest to its clients. Thus, becoming such a huge company will not be beneficial in the long run, as it could disturb geopolitical issues, etc. It has been observed that BlackRock has been practicing mergers and acquisitions for a long time. The advantages that come with acquisitions are: first, it reduces the number of competitors in the market. Second, it becomes convenient for the company to adopt technology rapidly instead of trying and figuring it out individually. The best examples of acquisitions can be Google and Facebook. These companies aggressively practiced acquisitions throughout their journey that helped them to achieve their goals within the stipulated time period. The company acquired Barclay Global Investors in 2009, Merrill Lynch Investment Management in 2006, Aperio for $1 billion, eFront for $1.3 billion, etc. are the companies over which BlackRock holds control. Number 9. Find advocates climate-friendly practices. BlackRock has always addressed climate change and mentioned the concerns related to it, as CEO Larry Fink believes that climate change is a serious issue that must be taken into consideration by all other companies. He urges the other companies in which BlackRock is invested to adopt measures and technology that would focus on long-term sustainable development growth. The business model of BlackRock revolves around financial advice, portfolio management, risk analysis, risk mitigation solutions through technology services. These financial pieces of advice are being delivered by a team of financial experts so as to understand the needs and wants of the client. The company also provides the solutions through technology software such as ALADDIN, which is responsible for a significant chunk of the revenue for the organization. Also, due to the privileges that the company possesses, ALADDIN has become more and more valuable. BlackRock is also termed as the company that owns the world. With such a huge market capitalization, the company has made investments in almost all the most prominent firms across the globe, which makes it more potent than others. Also, there were allegations made on the company of being responsible for the 2008 crisis that was due to the mortgage-backed securities, and these were the securities that helped Larry to deliver the profit of $1 billion to First Boston. Also, BlackRock has some special privilege to get access to the top-secret information legally, which makes it even more dangerous in terms of breach of privacy of the people. Having such valuable information in large quantity from across the world could have a negative geopolitical impact. Yeah, that's all for today's episode. And if you liked the video, make sure to hit the thumbs up button, and if you are looking for more exciting content, then hit the subscribe button for future updates.